There is a controversial new survey that's out where Gen Zers were asked about what they think is either too much or too little pertaining to a median income. And 41% of Gen Zers that were surveyed said that $74K is not enough to be considered middle class income. No joke, most didn't even think it was close to be considered a livable salary. Now I know because I too was shocked by this stat, and it also depends on what part of the country you're talking about. So in this video, we're gonna break down what's going on and why so many people believe that not even making 100K, six figures, is enough to actually be comfortable in the United States. And when I say comfortable, I mean belonging to the middle class. I'll also share some tips on how anybody can start to position themselves to get ahead, even on an average salary, the things that they can start doing now to better position themselves for the future. So be sure to stick around for those bits. But before we get into the video, my name is Arjun Dhingra. I'm a two-time Taekwondo world champion, a 23-year student of the mortgage game who puts out content like this to help reach people and help them make better decisions around money and responsibly taking out mortgage debt. So if you like topics like this, it would mean a lot to me if you would like this video and subscribe to my channel so that we can continue to grow and reach more people just like you. So first, let's look at wage growth here in the United States. Now, I remember growing up as a kid to say that if you were making six figures, like that was the dream. I want to be a six-figure guy, that you had somehow made it, or that was going to put you into a very comfortable lifestyle. And since wages don't rise fast enough, we can consider that 100K is going to be our benchmark. But are they actually growing or not? In 1980, the median income in the United States was about $75,000 in today's dollars. But by 2021, it dropped to $67,000, again, in today's dollars. So we can basically now assume that wage growth is stagnant. While lower and middle class workers have seen wage growth of anywhere between 5 and 9% since 1979. The top 5% of earners have saw a bump in income by 41%. Now, you can shout and scream about class warfare, or you can acknowledge that sometimes it does take money to make money, or the top percentage of earners have access to better information and investment opportunities, or are financially more literate, so they're putting themselves in position to accelerate their income growth. Now, one of the main reasons for this is something called labor market concentration, where employees had very few options to be able to switch jobs. So this gave employers a lot more leverage to pay less. And that's something that we can be sure does not happen to high income workers. And this happens mainly because so many people can apply to work remotely now in this post-pandemic era. Okay, so is 100K still 100K in today's world? Is six figures enough to get by? The very short answer to that is that it's not enough.
Are you nervous about the future?
Yes, of course.
Would you be able to afford to stay?
No, not at all. I probably would have to move in with my kids or whatever.
The typical American household is now spending nearly $500 more every month on the same goods and services.
There's no question that inflation is the #1 economic challenge we're facing in this country right now.
With inflation and the cost of living increasing everywhere around the country, 100K just doesn't quite go as far as it used to. Now remember what the definition of inflation is. It means that there are too many dollars chasing too few things. And when you have that, you get a rise in prices across the board, which then ultimately increases the cost of living. Everything from a cup of coffee to renting an apartment to even Uber rates that you ride to get to work. So let's compare 5 major areas or sectors where we can make this point: healthcare, transportation, insurance, and finally college tuition. According to the Bureau of Labor Statistics, if we spent $100,000 on a home in 1990, it would be the same as spending $377,000 in today's dollars. On healthcare, spending on that sector was 5% of US GDP in 1960, while today it's upwards of 20%. That is insane growth. Cars are another huge burden because most people finance their cars. In fact, 81% of car purchases are financed. But the average payments are upwards of $700 across the country now, and the terms are stretched out over 6 years. And auto debt is at an all-time high of $1.55 trillion with a T dollars. So on to insurance. Not only are car prices going through the roof, but insurance to drive those vehicles has risen nearly 4% over a 20-year span between 1990 and 2020. Now couple that in with the absolute crisis that is happening with home insurance, particularly here in California, where prices have more than doubled since 2001 to 2019. I know this from experience because my insurance has been canceled every year I've lived in my home in Marin County. Lastly, on to college tuition. One of the absolute biggest costs in America is this, college tuition, which has more than doubled in the past 30 years, with public schools averaging about $11,000 a year and private averaging just under $40K a year. So if we look back on those 5 categories, we see that the cost of everything has really gotten away from where wages are at. And then you add in anywhere between 4 and 8% inflation, upwards of 9 when we hit the peak over these last few years, and you can see why it's getting away from everybody. But is $100,000 a year still considered rich or comfortable? I would say that's ultimately going to depend on where you live. In the Bay Area, being at $100,000, some would argue puts you below the poverty line, which I know is a disgusting thing to say. But there's some truth to it in terms of the stress that people are living under here in California, particularly in the Bay Area. But $100,000 in my hometown would take you very far and give you a very comfortable lifestyle. So yes, San Francisco can have a rent rate of upwards of $3,000 a month for a 1-bedroom apartment, or almost 50% of a take-home salary. In New Jersey, for example, people say they pay $30K a year for daycare and $20K a year for healthcare, which is absolutely nuts. And in LA, $100,000 a year could be considered livable, but is definitely not rich. So it can go on and on. We can compare different cities, different salaries, and depending on where you live, the money can either go far enough or not quite far enough. So according to most data, in major cities like San Francisco or New York or Chicago, making anywhere between $150,000 and $200,000, according to respondents, is going to make them feel comfortable or even rich by some standards, whereas in small cities, $100,000 is more than enough. But the truth is, you cannot afford a median home that's priced at about $417,000 on a $100,000 salary because it just eats up too much of your actual monthly income. So scaling that to today's dollars, you'd probably need about $129,000 or $130,000, let's call it, as an annual salary to be able to afford a median priced home. So take all this into account, and all of this being said, I can understand why Gen Z feels very frustrated and says that $74,000 a year or even $100,000 a year is not a comfortable income or considered to be even middle class income. Life is generally more expensive, living is generally more expensive now, housing costs are through the roof and not showing any signs of turning around or slowing down in the near future. So we want to be realistic about things, and here's one place to start, particularly when it comes to buying a home, which is what I love to help people do here in the Bay Area or anywhere around the country for that matter. Expecting to buy your own home, median price at about $417,000 at the age of 25 is just not realistic. Most everyone that I deal with on a daily basis that's coming in and buying their first home is doing so with some kind of help, either by way of borrowing from the bank of mom and dad, they're co-buying with a partner, whether they're trying to get into an investment property, or getting a gift of some sort to help make this actually work. Whatever people have to do, beg, borrow, or steal the down payment to actually get into the market, your future self will thank you for having done that 5 to 10 years from now. But you don't want to be hard on yourself if you're not quite in position to do that. You need to have a plan. So first, it's time to pay off any small debts that are currently sitting on your monthly budget. Once you've done that, you can start to save for a down payment to eventually put down on your home. And this requires disciplined saving. I've put out some other videos when it comes to how to run an actual budget and how to accumulate more in your savings than you thought could be possible. So make sure to check those videos out on the same channel. But again, the average millennial is not actually buying their first home until the age of roughly 34. And even when they do so, they're doing it with a combined household, either because they've met their future spouse or have decided to partner with somebody, or they're actually married and now want to start a family. Plus, I'll state the obvious again, it really depends on where you live. $125,000 a year doesn't quite go as far in Boston as, say, $25,000 would in rural Michigan. So while buying a home at the age of 25 can be considered very difficult, if not downright impossible, depending on where you live, I think it's very realistic that home ownership can be achievable a little later in your 20s or in your early 30s if you're very disciplined about how you save, how aggressive you get with tackling debt, and watching what you are spending money on every month. I've seen few people do this, but those few are the ones that ultimately break into being able to make some investments and good financial decisions for their future self, versus the ones that are blowing all their money on their lifestyle and their experiences and just living it up. And this is the biggest difference, single-handedly, between people that get out of their 20s and approach their 30s on a strong pathway towards financial freedom versus those that are just on the hamster wheel. It's prioritizing your finances, getting really disciplined about how you're actually handling money, because ultimately those disciplines and structure is what's going to pay off huge in the long run. So I'd love to hear your thoughts on this. Make sure to reach out by dropping us a comment here in the video feed, or reach out to me directly on Instagram, because it's me that answers all of my DMs at Arjun Mortgage. Okay, so if you're thinking about moving to San Francisco or the greater Bay Area in general, make sure sure you click on the link below to download our home buyer's guide. That'll give you some basic starting points with how to budget and how to start planning ahead for this big life-changing purchase. And also is going to share with you everything you need to know about living in the Bay Area before you actually pack your bags and come out this way. But if you're already looking to put a plan in place or coming out to the Bay Area because you just landed a job and you want to learn more about home ownership and finally breaking into this market and beating the odds, make sure you email me at arjun@allwestern.com. My team and I would love and feel honored to help you get that process started and work with you for however long it takes for you to finally get your crack at this market. I hope you got a lot out of this video, and I'll see you guys on the next one.